Looking at the market for tomorrow, welcome back. Xavier here, talking a little bit about what's going on within the market. If you've been following my recent videos, I had been talking that the market had been holding below 28K, looking for a 28K breakout on volume, which of course we did get. Looking at the market, as you can see with the buy volume, let's look over at the daily chart. So I do follow primarily technicals. Again, like I said in my other video, fundamentals is very important for knowing where you want to go. Technicals lets you know when to get in. And so like I said before, we were looking for some buying volume to come in, and of course buying volume above the resistance where we were basically holding down for the past couple of days. You can see we hit at 27.6 and then backed off. Market had been wanting to break out of 28K, and for multiple days we were seeing a little bit of weakness and sell off. The market in terms of volume was kind of dying down. It was basically just kind of getting ready to ramp up, and I perceived that the market was going to bounce at the 27.3 mark, which is where we were holding for multiple resistance points, which we had here, here, and here. So this is what I had discussed in my previous several videos. I've been talking about the multiple price points within the market and what to keep your eye on so you knew where to invest. And so this is basically what I'm doing right now. I had been buying on this weakness, taking the chance that I believe that the market was going to trade higher. So of course I added more money to the account. You can currently see where I'm at with my account. I did make some switches by removing bonds that I had about 1,300 or so in bonds, and I had a little bit more in my risk portfolio, as well as some cash on hand that I had in my cash balance, and I dumped most of that into my bonds. I got rid of my Gap stock. I did sell the Gap. Right in here, and I took that profit and I dumped it into the dividends and a little bit into the risk. Like I said, I typically take the profits from my risk portion of my portfolio and then I dump those into dividends, so that basically my earned profits now starts earning income in my dividend plays. And that's basically my goal over the life of this portfolio, is to take about 25% of my money, put it into risk, and try to get about 30% or so on that money, and then dump that over into my dividend portfolio. So now that profit can basically earn dividends, and of course in shares that I'm going to be holding over a long period of time. One thing that I did want to discuss was I'm really liking the content that is coming out of AT&T. If you've been following AT&T, there's a little article here by Motley Fool about the shakeup that AT&T is doing with, of course, DC Comics and basically the DC Universe. And I do like the content. There's been quite a few different either video games that are going to be coming out. I am an avid gamer, so of course this is something that I'm interested in. I do, of course, watch the movies, and of course I didn't like a lot of the comic books. A lot of it, of course, changed. It was too much fluff and SJW and politics and social justice. It wasn't appealing to who their customer base, which is typically men. I'm hoping that with what I'm seeing, making some changes to how they're creating content. They also own HBO, and we're seeing some new content, of course, coming out of HBO. I'm looking forward to it. I really want to see HBO focus on making really good content. You've got Netflix, you've got Disney Plus, AT&T has HBO, and I want them to focus on making really good adult content. You've got AT&T with Disney that can make video with AT&T and DC that can pump out content for basically your teenagers and your middle range adult, but then you can have like some really good content coming out of HBO, which of course will generate revenue and of course subscriptions, which will translate into a higher stock price. That's basically what I'm looking at. I'm going to be putting some more money into the market, as I believe that the market is going to trade higher. I think that we'll probably not going to see any sort of resistance until about 29K. Over the next couple of months, the market may trade higher into the election, as long as, of course, the volume maintains. So that's basically what I'm doing with my portfolio. I did add quite a bit more. One thing that I did want to talk about was I did make a change. I did add Simon Properties. I do like Simon Properties. Of course, the whole thing with the malls, the mall REITs, etc. As you can see, I am down. Some things like, of course, still down in a CCL. Been holding on to CCL. Eventually, I believe all of these stocks will eventually move higher as the whole COVID-19 pandemic moves on, which is why I wanted to get into Siren Properties. One, I do like the fact that they went all in. It shows that they're dedicated to their business. Second thing, of course, they do pay a solid dividend, and there is a lot of upside potential in SPG. I do believe that there is quite a bit of upside potential, even if gotten in here around $64, even if it was to come up into a short time and we took profits at 90, that is a good chunk of turn on basically the capital that I have invested. But I do like it for the dividend. It pays a really nice dividend, as you can see right there. And I do think over the course that Simon Properties will do well, currently depressed among many other real estate stocks, which is why taking a chance that they're basically going to come out on top. I do like what I see in terms of the chart. We are holding slightly below that 70 range. We would basically be trading between 60 and 70, and I'm looking for a breakout, of course, on volume. Most important thing. In terms of the future of the future of this portfolio, in terms of dividends, this is what I'm looking for the next couple of months in basically Q1 of 2021. This is my goal, to have 40,000 in dividends, roughly around 40,000, with about 2,000 in income, annual income, which basically translates into $238 or so in terms of passive dividend income. Basically, my goal. If you're interested in watching how that unfolds, feel free, of course, to subscribe to the content. Typically release one of these about every week or so, depending upon what's going on within the market, or if I make any sort of real changes to the portfolio. Basically, the biggest change I made was, of course, getting out of the gap, which I took profits on. I basically doubled my money, bought it at $7.15, sold it at between 15 and 15.50. Put all of that, of course, into dividend stocks so that I start earning passive income off that money. I really didn't like GPS over the long term. It was only a short term play, which is why I sold. And that's basically what I'm going to be doing over the next couple of months. I think I'll probably do another one of these maybe in the middle, by the 4th. We'll do another one, or we'll see if there's any changes in the market, or if I make any sort of changes, I'll basically put out another content. But feel free to look forward to another video. I would say by the 4th, probably hit that 25K mark. So I'll put out another video with an update of what's going on and what I've been doing. If you like the content, feel free, of course, to like, comment, as well as subscribe. So I'll be doing these for the next couple of years. My goal, like I said before, my previous videos, to basically have about 1,500 in monthly income in the next maybe 5 to 7 years. My goal in terms of dividend play, my goal, of course, is to move abroad into the country, Colombia, basically living off of multiple sources of income that I have, but I really wanted to have a solid stream of income from passive income via dividend investing. Basically, the purpose of this portfolio, it's basically almost every single stock in my portfolio either pays a dividend or at one point pays a dividend that I believe will continue to pay a dividend. Like, for example, Carnival Cruise and Foot Locker both previously paid a dividend, currently do not. I believe once coronavirus basically dies down, that the dividend for these companies will, of course, come back. Basically, literally every stock that I have in this portfolio pays a dividend. Of course, even most of the stocks that are in essential my risk portion, Prudential, Play, JetBlue does not pay a dividend. That one is just solely for cash appreciation. I'll put that money into dividend. I think NLCH, I think one time they did. No, another stock, I just bought it for the appreciation, as I did like the chart. I do believe Norwegian, vastly underpriced. They will have a comeback. Most of these stocks will come back. It will just take a lot of time. And of course, Wells Fargo at one point pays a small dividend, basically taking just a small portion of my risk portfolio, but of course Dave and Buster's, and of course a lot of these tech stocks like Apple, Disney, Nvidia, Microsoft. A lot of these stocks, of course, also do pay dividends, but of course a lot of the purpose of this portion of the portfolio is cash appreciation, and then taking that appreciation, putting it right into dividend portfolio so that it can earn basically dividends on the cash. Anyway, I'm going to cut this video short, and I'll check you out next time. Thanks for watching.